which got introduced on July 1, 2017. Of course, for the nation growth and development. One nation, one tax, one market. Lot of mantra within this particular tagline. But today we are going to discuss the important topic, GST ITC, really giving a seamless flow of credit. What are the issues and way forward? So let me start today's topic on GST input tax credit. I'm going to make extempore presentation, no PowerPoint presentation. So I would be interacting with you. I can't see you, but I want each one of you, and you have to please before me, that you would be with me throughout this 2 hours. You'd be having a piece of paper, pen, or pencil before you. A lot of questions I'm going to ask today. Umesh has shown that he's ready with the paper and pencil. He's so great and generous. He has appreciated me a lot. I do not know whether I deserve that appreciation or not, but definitely he is very generous. Introducing me to all of you, he has said a lot of good words about me. I'm thankful to him. And when I said you should be ready with the paper and pencil or pen, he has shown me that I'm ready. That shows the eagerness of today's topic. Believe me, you will love it today. I know that there are two ways to communicate. One is a PowerPoint presentation, which I'm presenting from my side. Another way is no. I really want you also be the part of this presentation today. Interactive session. Yes, it is one-sided going to your way. I can't see your comment in a chat box except whatever question you're putting in a questions chat box, which I will take up at the end of my technical session. But during the session, I'm going to ask a lot of queries. It is not asking, I'm here to give you the answer also. So I will give you the answer, what is the correct answer of those queries. And maybe you can compile those queries, which are the issues and the way forward and solution for all of us together. Let me start. Since Umeshji is also keeping on, it is a fortunate part that I would be looking at his face. Whenever he, say by face reaction, yes and no, I will get an idea that what is the answer of my audience today. So he is representing today. I take him as a member of parliament today. So who is representing each one of you? Let's start with the topic. When GST got introduced in the country, it was preamble and object clause that there would be seamless flow of credit. But I'm sure you all know about it. Are we getting seamless flow of credit? Challenging. And we are not getting. Really, we are not getting. There are many obstacles and challenges together. Within the GST law, the definition of input services, and capital goods. The way it is being defined, it was intended that they are going to give us the credit on a wider perspective. Look at the definition of input under section 2, subsection 59 of CGST Act. Input means any goods other than capital goods, used or intended to be used in the course or furtherance of business. Look at the wider definition given. When you go back to definition of input service, under section 2, subsection 60 of CGST Act, input service means any service used or intended to be used, even the service which is intended to be used in the course of furtherance of business is an input service. And capital goods, as defined under section 2, subsection 19 of CGST Act, capital goods means any goods, when I start any goods which value of which is being capitalized in the books of accounts. So difference between input and capital goods is input means any goods other than capital goods, and capital goods means whose value is being capitalized in the books of accounts. Used or intended to be used in the course of furtherance of business. Look at the wider definition. But only problem which I see, that seamless, the term which is important. For any taxation system, I know there are two pillars. One is the outward supply, where we have to discharge the GST liability, and another one is my purchase. So whatever I purchase, whether it is input service and capital goods, and whatever I paid on my input services and capital goods, that should be available as a credit to me. But in GST, yes, we are having challenges. Let's discuss all these challenges one by one. And I'm going to give you some resolution, some way forward also. I will not leave you with the questions. I will also give you the answer. And you all are with me. Hope you are giving your dedicated 2 hours today. I know 31st July is the last date for ITR filing, and we all are struggling, but still you are joining today. That is the important one for me. So I will really give you something different, unique, special. Rest assured about that. Let's start. Chapter 5 of CGST Act, starting from section 16 to section 21, is the important provision, talks about ITC provision, input tax credit provision. So maybe you can make a little bit notes, so that tomorrow it is going to help you. That if at all you want to look at the GST ITC provision, under which provision you will look at? Chapter 5, section 16 to section 21. Section 16, subsection 1 is saying, and what it is saying registered person shall be entitled to avail the credit, subject to certain restriction and condition as prescribed under section 49 of CGST Act. Very simple. First, registered person will get the credit, but that credit may have certain condition and restriction as prescribed under section 49 of CGST Act. My first question goes to all of you. I'm unregistered. I'm not registered in GST. Let's assume this is the first question. And my turnover is, let's say, 19.5 lakh rupees, which is just near about to touch 20 lakh threshold aggregate turnover. Now, if I continue to be unregistered, then problem which we all know, credit is not available to me. But I'm giving you some platter that even though you are unregistered, you have purchased certain goods and services pre-registration, and you'd be allowed to avail the credit of the same, that provision existing in GST law. So tell me, what is the time period? You should take registration from the date you are liable to take registration. So let's say 1st April, you are liable to take registration. But you are applying on 29th of April. One situation. And another situation, you're applying on 6th of May. So when you're applying for registration on 29th April, whether you can take credit of input in semi-finished goods, input in finished goods lying on date, you were liable for the registration, which is 1st April. So whatever purchase you have made till 31st March, there may be certain input in your raw material, maybe in semi-finished goods, maybe in finished goods. You have paid GST, but you could not take credit because you were not registered. Now the date liable, 1st April, you are applying within 30 days, which is 29th April. Question H, and which I'm asking each one of you. Can you avail credit of your purchase made prior to 1st April? Answer H, yes, you can take credit. And period defined is 1 year purchase, as per section 18, subsection 1 of CGST Act. So I'm asking the query and giving the answer also. But what happened if you're applying on 6th May? You were liable from 1st April, but you are applying on 6th May. Please tell me, can you now avail credit of your purchase prior to 1st April of 1 year period, which I discussed just a while ago? And answer H, no, you can't avail the credit. And the deciding factor would be 30 days. If you're applying within 30 days from the date you're liable to take registration, then you're entitled. Otherwise, this credit is a loss. So this is the first section 16, subsection 1. So once you get registered under GST law, then only you can entitle, then only you are entitled to avail the credit. This question is clear to all of you. Now under GST, the different category, right? You may be a regular taxable person. You may be having registration, but as a composition dealer. Or you are registered, but you're supplying exempted goods and services. Or you are registered, but you're supplying both taxable and exempted goods or services. Then different provisions are existing today. This GST credit which we are referring for regular registered person. If you're a composition dealer, can you avail credit? You can't avail credit on your purchase. When you are supplying exempted goods and services, can you avail credit? Being your outward supply is not chargeable to GST for either or region, nil rated or exempted by way of exemption notification or non-taxable supplies. When you're not paying GST on your outward supply, quite obvious credit will not be available. And when you're engaged in taxable and exempted both together, quite obvious for taxable, you must get the credit, but pro rata credit. So pro rata credit, which comes with the provision, and the thumb rule would be, when you are engaged in taxable and exempted, then you have to create three bucket. First bucket, your goods and services meant for taxable supplies. Take 100% credit. Goods or services meant for exempted supply. No credit available to you. Then you got common ITC. So maybe commonly used for taxable and commonly used for exempted. Then proportionate credit in terms of Rule 42 for input and input services and Rule 43 for the capital goods. So hope you got, even though you are engaged in both taxable and exempted, you can get 100% credit for your taxable supplies, but you have to maintain books of accounts accordingly. Three buckets should be separately maintained. Section 16, subsection 1. Come to section 16, subsection 2, and very interesting one. Section 16, subsection 2 start with a non-obstante clause. Notwithstanding anything contained in this section means section 16. No registered person shall be entitled to avail ITC unless he satisfies certain conditions. What are those conditions? Let's start with first condition. As a buyer, as a recipient, you should have tax invoice copy, tax paying document. As a buyer, as a recipient, you should have eligible tax paying document, tax invoice, debit note. Second, you must have received goods or services. Third, your supplier must have paid taxes. So Umesh ji coming from Aurangabad, Maharashtra, and let's say I'm a supplier registered in Delhi, transaction is an interstate transaction, IGST levied. So Umesh ji, I've supplied to my buyer Umesh ji at Aurangabad, Maharashtra, 10 lakh rupees. 18% GST charge, and Umesh ji has paid the amount to me, to the supplier. Now, supplier defaulted. Even after collecting the tax amount, he hasn't deposited with the government exchequer. So, whole India, we are having this dispute. Buyer has paid the amount to the supplier. Supplier, even after collecting, defaulted in payment of tax to the government exchequer with a credit available to the buyer, who's a bona fide buyer, honest buyer. Buyer has paid the amount to the supplier, supplier defaulted. If we look at the provision, the condition of section 16, subsection 2, clause CH, that your supplier must have paid the taxes. And we all are struggling with. I'm going to discuss everything today. Third condition. And fourth condition, regularly filing GST return. In whose context it is being written? Is supplier regularly filing or recipient regularly filing? And don't give me the answer both. So I can't see, but still I'm trying to, agitate your mind, igniting your mind. It is for recipient, this provision is being written. Regularly filing GST return. 4 condition, right? We all know about it. Then 5th condition got added from 1st January 2022. 1st January 2022. And what is this 5th condition? That buyer's credit, recipient's credit must be matched with the credit auto-populated in a GSTR 2B, in a GSTR 2B, and there's no reference of GSTR 2A. So 5 condition, quickly run through. You should have tax invoice, receipt goods and services. Your supplier must have paid taxes. And being buyer, you are regularly filing GST return, and you must check credit auto-populated in your GSTR 2B. Now we have seen a lot of challenges, lot of notices. For 17-18, I'm being told that more than 37,000 notices are being sent. And even for 18-19, I'm being told equal around 40,000 notices are being sent to the taxpayer that credit availed by the buyer, recipient in a GSTR 3B is not matching with GSTR 2A. So if there's a mismatch of credit availed in GSTR 3B by the buyer and recipient, if it does not match it with GSTR 2A, department is sending notices to you and scrutiny notices under section 61. And let me tell you some of the pointers. First pointer is being supplier. If I'm not furnishing correct details of my buyer, so I'm not furnishing correct GST number of Umesh ji of Maharashtra, I'm furnishing a GST number of some other party, whether it is going to be reflected in GSTR 2A of Umesh ji, it is not. It was B2B supply, registered supplier to registered recipient, but captured as a B2C by the supplier. And supplier did not amend the transaction, time period gone. Is it going to be auto-populated in buyer's recipient GSTR 2A? It was interstate supply, but wrongly furnished as an intrastate by supplier. What happened? Place of supply mentioned as Delhi as against Maharashtra. Credit is not there. Supplier has filed GSTR 3B, paid the taxes, but he did not file GSTR 1. With the credit going to be auto-populated in GSTR 2A of buyer? Question H, no. Credit is not going to be auto-populated. So what happened? This credit is not available to you, to the buyer, to the recipient. You got scrutiny notices under section 61. Whether this credit is available or not available. This is the question I posted to all of you. Think and give me the answer. I can't see, but I can see the vibration which is going from my side, and try to answer. Legally, as per me, this credit can't be denied. And it cannot be made dependent, cannot be, I'm using the term cannot be, made dependent on GSTR 2A for the period prior to 1st January 2022. This is a legal provision. There was no reference of GSTR 2A. I said 5 condition, right? Did I utter anywhere that GSTR 2A is really important condition? It is not. GSTR 2B has been inserted, 5th condition, and that too from 1st January 2022. So my credit is really dependent now on GSTR 2B, no denial, but there's no reference of GSTR 2A. Another point which I would like to touch base with this point, there was one rule, Rule 36 sub Rule 4. You'd be recalling that rule, which came from 9th of October 2019. And what was that rule? That being buyer, being recipient, there would be capping for you to avail credit pertaining to such credit which is not auto-populated in your GSTR 2A. If you're recalling that Rule 36 sub Rule 4. And initial capping was 20%, reduced to 10% from 1st January 2020, reduced to 5% from 1st January 2021. And if you want to understand this provision, take practical example. Let's say you have availed credit in your books of account 15 lakh rupees, 15. But your GSTR 2A is showing only 10 lakh rupees. So the difference of 5 lakh rupees, right? Question was, what happened? Whether I can avail this credit of 5 lakh, which is not coming in GSTR 2A. Rule 36 sub Rule 4 prescribing a particular provision capping the credit. Initially 20%, then 10%, then 5%. And they say to the extent it is not coming in 2A, which is 5 lakh, you would be allowed only 5%, and that to be calculated on eligible credit as auto-populated in GSTR 2A. So GSTR 2A showing 10 lakh, difference is 5 lakh rupees. You would be allowed only 5% of 10 lakh rupees pertaining to that 5 lakh rupees. This was Rule 36 sub Rule 4. To my mind, now let me conclude as a way forward. There is no legal provision which talking about that my credit is dependent on GSTR 2A. GSTR 2A came by way of rule, and there was no corresponding provision in the Act. So first answer is rule cannot determine the basic provision. Provision are considered as a father. Unless father gives the power, rule cannot be made. So rule is going contradictory. First point. Yes, my credit is dependent from 1st January 2022, which is GSTR 2B, not the GSTR 2A. And third, one Supreme Court judgment. One Supreme Court judgment. Listen very carefully. I was interacting with one of the session with the top shot of CBIC. And I asked them, sir, why you are sending so many scrutiny notices to the market, to the taxpayer? And you are saying that this credit must be cross-checked with the GSTR 2A, when GSTR 2A is not relevant. And I reminded them the Supreme Court judgment, listen very carefully, and that may be your defense when you're applying such scrutiny notices if you have got from the department. In the case of Bharti Airtel, what happened? For the period July 17 to September 17, they were having liability, GST liability of 923 crore rupees. Listen, I'm saying 923 crore rupees for July 17 to September 17. What they did, that initially when GST came, there was no GSTR 2A. So they paid the liability through cash, e-cash ledger. When GSTR 2A came sometime in September 2018, they realized that they were having enough credit in the relevant period, July 17 to September 17. So they thought they could have paid their tax liability through this e-credit ledger instead of e-cash ledger. They moved the writ petition before Honorable Delhi High Court, and they wanted to amend their GSTR 3B. And by amending GSTR 3B, they pleaded before the court, my lord, kindly allow me to amend my GSTR 3B, and whatever I paid through cash, I should be allowed to use my e-credit ledger, because I was having enough credit as against e-cash ledger. I did not take credit because GSTR 2A was not available. That is the reason they cited why they did not take credit and why they did not utilize e-credit ledger. They cited GSTR 2A was not available for the period July 17 to September 17. Now, since they were having the enough credit, since GSTR 2A came late, and it came late because of the government of India, they did not introduce GSTR 2A on time. And that was the reason cited by Bharti Airtel before the Lordship, that I was having enough credit, but not knowing that I paid through cash. Now you should allow me to amend my GSTR 3B. And so whatever I paid through cash should be allowed to be adjusted with the e-credit ledger, and whatever I paid in cash should be refunded back. Honorable Delhi High Court has given favorable judgment to Bharti Airtel. Yes, you can amend your GSTR 3B. Now you can utilize your e-credit ledger and take the money back, 923 crore rupees. Quite obvious, department filed SLP against the judgment before Honorable Supreme Court. And what is the judgment of Honorable Supreme Court? Honorable Supreme Court has said, Mr. Bharti Airtel, GST is a self-assessment tax. You could have taken credit. Who stopped you? Why you are arguing GSTR 2A was not available for that impugned period, July 17 to September 17? Why you are arguing that? You should not argue that one. GSTR 2A is nothing but a facilitation, nothing but a facilitation given to the taxpayer. If you're entitled to avail credit, you could have taken the credit as a self-assessment tax. And 2A is only facilitation. Who said? Honorable Supreme Court. If Supreme Court is saying GSTR 2A is only facilitation, then why department is issuing notices when this is not matching with GSTR 2A? And I told you that the 2A came by way of rule. There was no provision in the Act. And it is only to be from 1st January 2022. Then we can safely say that our credit, buyer's credit, recipient credit is not dependent. on GSTR 2A. I hope I'm clear to all of you. Let me take one step further. Now, we all know GSTR 2B is the important document. We have to match our credit with GSTR 2B, effective from 1st January 2022. But I'm creating two situations here. That even credit coming in GSTR 2B, but still you can't take credit. It is coming in GSTR 2B, but you can't take credit. And another situation, it is not coming in 2B, but still you can take credit. Still you can take credit. So let's start. Let's say some credit coming in your 2B, auto-populated in 2B, but I'm saying you can't avail the credit. Give me one example. Think on those lines and tell me what could be the answer. One important example is, I'm a supplier in Delhi. I supplied the goods, let's say on 30th June. Raise my invoice on 30th June to Umesh ji at Maharashtra. This invoice I have furnished in my GSTR 1 of the June month, getting auto-populated in GSTR 2B for the buyer, for the recipient, for the month of June. But you're receiving goods on 5th of July, 5th of July. Question is, credit coming in 2B for the month of June, but you haven't received the goods. Can you avail the credit in the month of June? Answer is no. You can't avail because you have to satisfy this condition as well. All the 5 conditions need to be satisfied. So credit at most going to be available only in the month of July. So this is the example when credit coming in 2B, but still you can't take. Now next example is credit not coming in 2B, but still you can take the credit. Tell me what are the example in your mind? And answer could be on import of goods. When we are paying custom duty, including IGST. Sometimes it is not transmitted from ICE gate to our GSTR 2B on GST common portal. And you did not find that entry coming auto-populated in GSTR 2B. So what happened? You have paid IGST, which is not auto-populated in GSTR 2B. There are import of services. There are certain RCM liability which you have paid as a buyer, as a recipient, which is not getting auto-populated in your GSTR 2B, where the credit is not available. Credit is available, 100% available, even though it is not coming in your GSTR 2B. So hope you got my first pointer very clear, that what is the relevance of GSTR 2A and 2B. Now to conclude this particular challenge. So what happened? Post 1st January 2022, and I need answer. I can't see chat box because this is one-way communication. Chat is not available before me, but I mean to all of you. Post 1st January 2022, let's say Bimal Jain again make mistake and he's wrongly furnishing GST number of his buyer. So if I made the mistake of wrong furnishing of GST of my buyer, is it going to be auto-populated in your 2B? B2B supply captured as a B2C challenge. Paid through 3B, GSTR 3B filed by the supplier, but he did not file GSTR 1. Interstate supply captured as an intrastate. What happened? It is not getting auto-populated in GSTR 2B. Can you now avail credit, which is not coming in your GSTR 2B post 1st January 2022? Please say. Answer H. Now you can't avail credit. Now the credit of buyer and recipient is dependent. Let me tell you, dependent on your supplier. So you have to really cross-check and verify month-on-month basis. You need to go back to your supplier telling him, Mr. Jain, you have wrongly furnished GST number. It is not coming in my 2B. B2B captured as a B2C. It is not coming in my 2B. Still, I'm satisfying. I'm having tax invoice, received goods and services. You have paid the taxes, maybe, but it is not coming in 2B. So kindly check your transaction whether you have furnished or you have wrongly furnished. So credit is now going to be dependent on your supplier. So concept has come, know your supplier. And way forward, there are a lot of provision which is going to done away two-way communication. And you know, Finance Act 2022 has made a lot of provision in this regard. Two-way communication is going away. And what is this two-way communication going away? Let me quickly touch base. And credit is going to be dependent only on your supplier. So you must know your supplier, and your supplier must be tax compliant. Then only credit is going to be available to the buyer, to the recipient. Look at the four important changes, which is really giving that way forward. Credit going to be dependent on supplier and the tax compliant supplier. First is Rule 59, Sub-Rule 6 of CGST rule. And this rule is saying, Bimal, unless the taxpayer filed GSTR 3B for the preceding month, he will not be able to file GSTR 1 for the current tax period. So if current tax period is July, and you want to file GSTR 1 for July, you have to make sure you have filed your GSTR 3B for the month of June. Second, explanation under section 75, subsection 12. And it is clearly saying that output tax as declared in GSTR 1 must matches with the output tax as disclosed and paid through GSTR 3B. If there is difference, that is going to be called self-assessment tax, and it can be recovered even without issuance of so-called notice. So you need to be careful, supplier need to be careful, the registered person need to be careful. His output tax as per outward supply as declared in GSTR 1 must match it with GSTR 3B and pay the taxes accordingly. Section 37, part of Finance Act 2022. They are saying, Bimal, unless you file GSTR 1 for the till preceding period, you will not be able to file GSTR 1 for the current tax period. 37. This is the part of Finance Act 2022, and it is yet to be notified. They're saying, if at all you want to file GSTR 1 for July, you have to make sure till June you have filed your GSTR 1. So look at the way, and section 39, again part of Finance Act 2022, section 39. And it is saying, Bimal, for the current tax period, July, first you have to file GSTR 1. Once you file GSTR 1, then only it get enabled for filing GSTR 3B. So they are saying first file GSTR 1, then you would be unable to file GSTR 3B for the current tax period. And with each process, and they have omitted the provision 42, 43, 43A in Finance Act 2022. And with this process, they have done away two-way communication. It is now only one-way traffic. So buyer's credit, Umeshji's credit is now going to be dependent on Bimal Jain. And Bimal Jain need to be tax compliant. So as a buyer, as a recipient, you must know your supplier, like the concept, know your customer in banking sector. So he should be tax compliant. So way forward from 1st January 2022, credit need to be checked from GST Act 2B. So this is the first aspect which I discussed with all of you. Let me move to next provision, section 16, subsection 2, clause C. And what is this? In the beginning, I said, I'm supplying from Delhi to Maharashtra to Umeshji. 10 lakh, 18% IGST. And Umeshji from Maharashtra, who is my buyer, recipient, has paid the amount to the supplier. Supplier did not deposit the tax, even after collection of tax. So please tell me, even after collection of tax, supplier has not deposited. What happened? With the credit going to be available to the bona fide, honest recipient? That is the question. Pan-India issue. Section 16, subsection 2, clause C. Now let me run through and let me put my defense. Credit should not be denied. As a logical person, you will always say credit should not be denied for the buyer's recipient, who is bona fide. He has paid the amount to the supplier. Supplier defaulted. Why credit should be denied? It's a condition in GST law. I've gone back to pre-GST era and checked the provision and checked the legal jurisprudence in this regard. Honorable Supreme Court, in the case of KK Industries, matter was central excise when credit is available under Sanvit. Similar issue happened that supplier did not deposit the tax amount. And question was whether credit can be denied for the recipient, for the buyer, for the fault of supplier of non-payment of taxes. Honorable Supreme Court said, no way. Credit can't be denied for the buyer, for the recipient. Even under the VAT regime, maximum High Court has ruled in favor of a taxpayer, including Delhi High Court judgment in the case of Arise India, that credit can't be denied for the buyer recipient for the fault of supplier of non-payment of taxes. There's only one judgment from Bombay High Court. Since we are referring to Umeshji from Maharashtra, this is the only judgment against the taxpayer, Mahakotal Lakshmi case. And they have said credit is not available to the buyer. So in GST also we are having similar challenge, isn't it? We are having similar challenge. What happened? Buyer has paid the amount to the supplier. Supplier did not deposit. Supplier defaulted even after collecting the tax. So I'm putting certain, argument which are defense point and which can be put forth for defending a case. There's one doctrine of impossibility. Lax non cogit ad impossibilia. And what is this doctrine all talks about? This doctrine says buyer and recipient is saying, Milord, I paid the amount to the supplier. How do I come to know that the supplier, even after collecting the tax, is not depositing the tax? And quite obvious, when GST Act 2A was not made available, and we know GST started from July 1, 2017. GST Act 2A came sometime beginning of September 2018 or beginning of 2019. And initially there was no information that whether supplier has paid the taxes or not. Over a period of time, it got further improvised. So unless recipient and buyer is having any window, any machinery provision available through which they can see that this supplier, even after collecting the tax, is not depositing, then you can really put burden of proof on the recipient, on buyer. When 2A is not available, how this poor fellow buyer can be made chargeable? He was not knowing even, and no window, no machinery provision. 2A was not available. So these are the problem we can cite it under doctrine of impossibility. And second could be GST department has given registration to both of us, supplier and recipient. Why department at all time go after only on recipient and buyer and demand reversal of ITC only from the buyer and recipient, and that too along with interest and penalty? Why can't they go after defaulting supplier? They have given registration. They know who is the defaulting supplier. They must investigate against the defaulting supplier. They must collect the tax against the defaulting supplier. But why they are not doing so? There is one good judgment, Madras High Court, Madurai bench, D.Y. Bethel Enterprises. And similar issue, department wanted the recipient to reverse credit ITC along with interest and penalty for fault of supplier of non-payment of tax. And petitioner pleaded before the court, Milord, doctrine of impossibility. And they also pleaded why they are not taking any action against the defaulting supplier and why they're coming back to me and after me for this reversal. Honorable Madras High Court given good judgment, favorable judgment, that department cannot demand reversal of ITC from the recipient unless they initiate action against the defaulting supplier. This part is over, but now I'm connecting very interesting part. What would be your answer now? That GSTR 2A came beginning of 2019, right? Beginning of 2019. And you as a buyer and recipient know that your supplier is not depositing the tax because that information is now made available post GSTR 2A. Now, when you know that your supplier is defaulting, not paying taxes, are you supposed to reverse ITC, input tax credit, for default of your supplier of non-payment of taxes? This is the moot question. And let's listen this part very carefully. I know that we are doing a lot of, we are watching and we are doing, but certain things which comes as a new platter, a new kind of variety of meal for us. I'm giving you a new variety today. In Finance Act 2022, Section 41, subsection 2 got substituted. And what this 41 subsection 2 is saying, that you as a recipient and buyer need to reverse credit for non-payment of taxes by the supplier as per section 16, subsection 2, clause C, and that too along with interest. And you can re-avail the credit whenever taxes paid by your supplier. This is the provision under section 41, subsection 2, which is now the part of Finance Act 2022. But this is a prospective clause. Prospective clause. It's not the retrospective one. And yet to be notified. So look at the interpretation which I'm drawing from this 41 subsection 2. It can be interpreted in both ways. Let me interpret this provision from department, GST department perspective. GST department is demanding reversal, right? From the buyer, from the recipient. And DY Bethel Enterprises, Madras High Court, followed by Supreme Court of pre-GST era, KK Industries, lot many High Court judgment of pre-GST era under VAT provision. Court may ask the department, no, you can't demand reversal. So what is being made? It is being made in the law that if taxes are not paid by the supplier, then department can demand reversal from the buyer, from the recipient, along with interest. And rate of interest would be 18% per annum. So this is the provision helping to the department for reversal. Let me tell you, this provision is helping me to the taxpayer as well. Listen how I am going to interpret the provision before the lordship. I will say, my lord, yes, section 16, subsection 2, clause C says one of the condition that if supplier does not pay, credit is not available. I'm going to say to the court, my lord, where the provision of reversal? Yes, this is the condition, credit not available, but where the provision of reversal? I'm sure department going to say 41 subsection 2, reversal. But that is only prospective provision from a date to be notified. I will say this is only applicable from a date to be notified. Prior to that, you can't demand reversal, because your reversal specific provision is now introduced, made the part as per Finance Act 2022, which is prospective for past period, prior period. Till the date it is notified, I can say there's no provision in GST law demanding reversal of credit. And hence this is going to help me as well. Even though 2A is there, I can see supplier has not paid the taxes, but still I can depend on 41 subsection 2. This is my gut feeling on interpretation. Let me take the third and important argument, interpretation. When we always file a writ petition in the High Court, we always say it is violative of Article 14 to the Constitution of India. Article 14 to the Constitution of India. And Article 14 says you cannot discriminate among equals, right? So we can always debate this matter that this is violative. Section 16, subsection 2, clause C is violating Article 14 to the Constitution of India. How come it is? Listen very carefully. There are two kinds of a buyer, two kinds of recipient, two categories. One recipient who is paying the tax to the supplier and supplier is not depositing. And another situation, there's the buyer who is not paying the taxes to the supplier and supplier is also not depositing. Listen very carefully. They're saying unless paid by the supplier. So first case, buyer is paying to the supplier and supplier is not depositing. Second case, buyer is not paying to the supplier and supplier is not depositing. Both are treated same. It can't be. It can't be. There should be something intelligible differentiation between two categories. It cannot be treated at par. So bona fide buyer who has paid the amount to the supplier cannot be treated at par with the recipient who has not paid to the supplier and supplier has not deposited the tax. Hence it is violative of Article 14. And we can always argue in terms of Article 19(1)(g) and Article 300 capital A, which is my vested right. So this is on section 16, subsection 2, clause C. Now I'm coming back. Third component, important. There are two proviso after section 16, subsection 2. Two important proviso are there, and that provisos are very, very important, and it's important for us to really run through. In GST law, the first problem which I see, that kind of provision they have made it is really not giving ease of business. It's not conducive, not giving ease of business. For the reason, I'm a supplier. I'm a chartered accountant. Leave supplier context now. I'm a chartered accountant. I raised the invoice today, 10 lakh rupees with 18% GST, IGST to my Maharashtra client. Now, this client does not pay me on time. It always takes time, 2 months, 3 months, 4 months. We have seen that. Question comes, I'm not being paid. Do I require to pay GST on accrual basis? GST law is saying so. That supplier who is a chartered accountant need to pay GST on accrual basis, irrespective of fact whether he has collected the amount. Under pre-GST service tax provision, there was at least provision of threshold 50 lakh rupees. You must be recalling that. That provision is not existing in GST law. If I don't deposit, I'm a small chartered accountant, small service provider. If I don't deposit, then what happened? They will ask for the interest for delayed payment of tax. Am I right? And what is the rate of interest? 18% per annum. Can you think of this 18% rate of interest? First of all, I haven't collected the money. And second, if I delay, then I have to pay 18% per annum. Just imagine, it looks like I need to take loan from the bank for 12% or 11% rate of interest and pay the GST liability to safeguard certain rate of interest. This is not really helping to the SME and MSME sector. I just gave the example from chartered accountant perspective, but that is what the provision all about. Having said that, to safeguard interest for SME and MSME, there's one provision, second proviso under section 16, subsection 2. If buyer recipient fails to pay the value and tax to the supplier within 180 days from the date of issue of invoice, then as a buyer, as a recipient, you need to reverse credit along with interest. You need to reverse credit along with interest, and rate of interest would be 18% per annum. And whenever it is being paid to the supplier, you can re-avail the credit, but interest is a loss. Interest is a loss and cost. Now, having said this part, we have to understand, as a buyer, as a customer, there's a condition you must pay within 180 days from date of issue of invoice by the supplier. So government is saying, Mr. Jain, we are safeguarding SME and MSME. We are ensuring that your buyer must pay within 180 days. Otherwise, their credit going to be reversed along with interest. But just give me the answer. I'm asking each one of you. Will the client really pay, keeping in mind that I need to take credit or reverse credit? No. And we always seen as a chartered accountant, we are being paid for last year audit when we are conducting audit for this year. That is the irony pan-India. But nevertheless, this provision is existing for reversal of credit along with interest. So let me really run through this provision as well. When this provision is not applicable, I'm giving you 4 instances, 4 situations when buyer or recipient need not reverse ITC. So what are those situations? First situation, whenever there is RCM liability, recipient need to discharge GST. Then in that case, as a buyer, as a recipient, you need not reverse credit because there is no question you are paying the tax. Second situation, when there is Schedule 1 transaction, Schedule 1 is deemed supply. without consideration, quite implied without consideration. When it is without consideration with a question of payment of consideration, hence this provision is not applicable. Third, when there is a part payment, so I raise invoice for 10 lakh, charge 18% IGST, but partly paid by the customer, then only to the extent of partly not paid, only to the extent of partly not paid, you need to reverse credit. And last, when section 15 subsection 2 clause B of CGST Act is applicable. What is section 15 subsection 2 clause B? It is saying supplier is liable but incurred by the recipient. So I was liable to pay, supplier was liable to pay, but you as a customer, you as a recipient has incurred the same. So it is as good as deemed as paid. So the second proviso of reversal is not applicable. So this is the provision part. Now coming back to the challenges in the trade. Sometimes there's a force majeure clause in the contract. Force majeure means beyond the control of any party. Like COVID, we have seen that COVID was beyond control of anyone, and we got delayed in payment of taxes, value of invoice along with taxes. So when there is force majeure clause and you fails to pay within 180 days, which is the criteria from date of invoice, what happened? So I'm of the view, as per my humble opinion, force majeure clause in the contract, which is warranting that there's a delay in payment, I can always say the term fails to pay does not satisfy. It is beyond the control. There has to be intentional failure on the part of recipient and buyer that he is not abiding by. Force majeure. Now, I'm giving one or two examples and asking each one of you. You tell me what is the answer coming to your mind. Sometimes there is no force majeure clause in the contract, but credit term is being extended for a year, for 1 year, from date of invoice. So what happened when credit term is a longer term? You as a buyer, you as a recipient will pay only with 1 year time period given to you. Is it the case of fails to pay? I'm asking each of you. It is not the case of fails to pay. To my mind, it is not a case of fails to pay. Fails to pay means there was agreed term between supplier and recipient, and you as a recipient fails to pay. When we have agreed that credit term is 1 year, both of us agreed, how can it be fails to pay? Sometime we renegotiate the contract for any either or condition. Keeping aside there is no force majeure clause. We renegotiate the contract. And while renegotiating the contract, we arrive at a new date for payment of tax. So when both the party, supplier and recipient, agreed for new date, can we say this is fails to pay? Can we say recipient fails to pay? Recipient fails to pay can be understood only when it is not being agreed by the supplier. When supplier come forward, both of them renegotiate and decide a particular new date, I can always plea and defend myself. There is no fails to pay. That would be my submission. But it is always advisable. We should create documentation. We should substantiate our terms that we renegotiated. Even for the wider credit terms, there has to be contract, not by word of mouth. Even I can say verbal are also applicable as per Indian Contract Act. But still you should have some documentation to substantiate it was agreed, then only fails to pay will come into the picture. So that is what my interpretation on second proviso, when recipient supposed to reverse ITC, when it fails to pay within 180 days. Having said that, now I will touch base the important Finance Act sixth condition. So Umeshji was right when he started that GST ITC is not seamless. He said, I did not say anything. At the introduction, he only said that GST ITC is not seamless. It looks like to me it's not seamless. Lot of challenges. You know, this Finance Act 2022 has put 6 conditions read with 6 restrictions. Sixth condition read with 6 restrictions. And these restrictions are being provided under section 38 subsection 2, which is Finance Act 2022. So what is this 6th condition is saying? This 6th condition is saying, Bimal, your credit, which is auto-populated in GSTR 2B, it must be checked that it should not be restricted. It should not be restricted under section 38. So first you look at all these 6 conditions: having invoice copy, receipt of goods and services, supplier must have paid taxes, you as a buyer filing regular GST return must be auto-populated in your GSTR 2B, and now it should not be restricted. That is what it is being said. It should not be restricted. And now when I go to section 38 subsection 2, there are 6 restrictions that even though credit coming in GSTR 2B, but still it can be restricted for following cases. What are those following cases? Case number 1. For a specified period from the date of registration taken by the registered person. So if person is taking registration, then for defined time period from his registration can be stated that this credit is not available. Second, if you are defaulted in payment of tax and default continues for specified period. Third, your output tax as declared by outward supply in GSTR 1 exceeding when you are paying your output tax as per GSTR 3B, and that exceeds beyond a specified limit. So that the difference liability declared in GSTR 1 versus GSTR 3B, and it is exceeding a particular limit. That limit they will specify. Fourth, credit availed in 3B is exceeding with the credit coming in GSTR 2B, and that is exceeding to a specified limit. Fifth, that there is certain restriction that you should utilize your credit under section 49 subsection 12, and important is rule 86B. They have said that you should use your credit ledger to the extent of 99% when value of supply for a particular taxable supply in a month exceeding 50 lakh rupees. So there's a restriction prescribed in rule 86B for utilization of your e-credit ledger that you need to follow. And sixth, any other situation they may specify. So these are 6 restrictions under section 38 subsection 2. So as a recipient, as a buyer, see our life is made. Is it easy? It is really seamless flow of credit. First, there were 5 conditions, then a 6th condition got introduced, interlinked with the restriction of 38 subsection 2, which is yet to be notified. Now, these 6 restrictions which is being prescribed, we do not know it is in the context of supplier and recipient or both of them. And what could be the specified limit which is being referred under section 38 subsection 2? Nothing is being stated. This is the part of the provision, and they are going to specify by way of rule. So we have to wait and watch. So look at the life of GST ITC, whether seamless or not a seamless. You are the better person who can judge. Come to now important aspect, section 16 subsection 4. Time limit to avail credit, which is another important topic, and we all are looking for the answer. What is the time limit to avail ITC? Section 16 subsection 4. And it is saying earliest of to date. Earliest of to date. First, due date of furnishing GSTR 3B, which is a return under section 39, for the month of September in next financial year, following the end of financial year. So due date normally for 3B is 20th October in next financial year for the month of September. Or date of furnishing annual return, which is quite obvious, 31st December. So earliest would be 20th October by default. So if we take up a case 21-22, financial year 21-22, what would be time limit for availing ITC as per section 16 subsection 4? Time limit would be for September 22, GSTR 3B due date normally is 20th October 2022, and date of furnishing annual return for financial year 21-22 would be 31st December 2022. Quite obvious, the date would be 20th October 2022. But in Finance Act 2022, they have made amendment under section 16 subsection 4. And they're saying it is going to be now, they have deleted the due date of furnishing a return under section 39 for September. It is being made 30th November of next financial year. So they are saying 30th November of next financial year pertaining to any particular financial year, or date of furnishing annual return, whichever is earlier. So it is going to be 30th November. Appreciated. But this is the part of Finance Act 2022 yet to be notified, But keeping this parameter in mind, we are having challenges. We are having challenges for the past period also. 17-18, by way of special order, the last date was 31st March 2019. But annual return, which was filed by 31st January 2020. In some of the state, it was 5th or 7th February 2020. 18-19, 20th October 2019, due date furnishing 3B. And the last date for annual return was 31st December 2020. So we are having challenges for the past period. What to be done? What is the way forward? We are finding that credit could not be availed by the registered person, time period lapsed. What to be done? Now, there may be debate both sides, and a lot of writ petition has gone to the High Court challenging section 16 subsection 4. Let me take up one case and let me discuss this part, which is the legal point, which can be defended both ways. But let me try out this particular interpretation, and you please try to answer by yourself. I hope you all are watching me and you're not running to close down your office. I know 7 o'clock, but I'm thanking each one of you that you all are with me. Umeshji is also not leaving today and he's still sticking to it. See, my objective today was that without PowerPoint presentation, if you get this much of interest, that makes my task easy, because you get involved yourself. And even though I'm not seeing you, but I'm finding you that you all are connected, and that is my confidence. So let's stay tuned together. I can I can interpret rather that time limit provision is contradictory. How come it is contradictory? Let's take an example. Section 16, subsection 2, which is starting with a non-obstante clause, notwithstanding anything contained in this section. So in section 16, they are overriding everything. No registered person shall avail credit unless he satisfies following condition. In those conditions, there is nothing like time limit. It is only having tax invoice, receipt goods or services, supplier must have paid taxes, you are regularly filing GST return, must be matched with GST Act 2B, and then this sixth condition to be read with sixth restriction under section 38 subsection 2. I can always say that section 16 subsection 2 is overriding section 16 subsection 4, and no time limit, first part. And when I'm discussing this part, importantly, recently Honorable Supreme Court in the case of Tran 1 credit in Philco Trade Center Private Limited, recent direction which is given by Honorable Supreme Court, lot of hue and cry. So what happened? And we have seen that last date for availing Tran 1 credit was 27 December 2017. And we have seen that the government has made IT grievance cell also, committee also. And a lot of taxpayer could not avail credit, transitional credit of their pre-GST era into GST regime. Reason could be either they did not try at all, or they did try, but they could not file Tran 1 because of technical glitches, or they have filed Tran 1, but there was mistake and they could not revise it. So many factors are around. And even the judgment also coming from High Court are different in a different way. If I pick up one Punjab and Haryana High Court judgment, Advert Technologies Private Limited, Honorable Punjab and Haryana High Court has said that this GST Tran 1 credit, transitional credit, is a vested right in terms of Article 300 capital A. It cannot be taken away. And the judgment was upheld by Honorable Supreme Court earlier. Coming to brand equity, which I'm talking about by Delhi High Court judgment, it is clearly being said rules are only procedural, directory in nature, that cannot take away our substantive right, Cannot take away our substantive right. And they have considered 3 years time limitation period for availing transitional credit, till 30th June 2020. That was the brand equity judgment. More than 400 cases has been decided by Honorable Supreme Court by one stroke. Total number of pages of order was 47, but operative part only 2 pages, which was direction already made available on public domain before this judgment came in. So a lot of learned, persons started sounding that let this judgment come. There would be interpretation. There will be way to look at, and then only we can talk about. There's nothing in the judgment except the 2-page direction, which was verbatim as such being picked up in the Supreme Court judgment. And what is being said in that judgment? Honorable Supreme Court has directed CBIC to open a special window starting from 1st of September 2022 to 31st October 2022 for all those who could not file their Tran 1 or could file Tran 1 but made mistake, or there was technical glitches, they can go and file their Tran 1 or Tran 2. 90 days window is being given to the field officer. They can verify, check, and affirm and pass reasonable order accordingly. And then amount would be credited to the e-credit ledger. GST Council is being asked to prepare SOP, standard SOP for this particular mechanism. Now, this is the order coming from the Honorable Supreme Court by way of direction. So what happened? Time limit gone. It is transitional credit. Of course, section 16, subsection 4 will not have any limitation. But I'm only saying that these are vested right. And that's what Punjab and Haryana High Court, which I referred. That's why I referred brand equity. But you know, there's a Bombay High Court judgment here, Umesh Bhai. Nalco Limited, it was against the taxpayer. In Nalco Limited, what happened, Umesh Bhai? Bombay High Court said, Mr. Nalco, you did not even try to file your Tran 1 by 27 December 2017. Your lock sheet is saying you did not even give a try to file your Tran 1. Hence, you will not be allowed to give this benefit. Bombay High Court judgment. So what happened? The fate of such judgment decided. And another case which I'm picking up, which is important to maybe you have filed your Tran 1, but for either or region, it is being demanded by the officer at the time of audit and verification that this credit is not available to you, and you have reversed. And you may have reversed along with interest. So what happened? Whether this window is really open for them as well? Those who could file the Tran 1, but there was some mistake, they have reversed the credit for either or region along with interest, whether that window is available to them. I'm only submitting my request to the CBIC Policy Wing and GST Council, if they're listening to me and watching my video later on, that they should also allow this window for refund mechanism to them or credit, reinstatement of credit, with such taxpayer has tried to file Tran 1, but reverse credit for either or region. So this was on time limit part. Another point which I would like to do, again, case study. And I will try to explain the relevance of section 16, subsection 4 as well. Time limit to avail credit. Let's say I'm a supplier, which you know since beginning I'm saying I'm supplier and Umesh ji, and you all are my buyer at Maharashtra. My product is chargeable to 18% GST rate. But let's say wrongly I have applied 12% GST rate. Wrongly I have applied 12% GST rate. Whereas I should have charged 18%. Now question is, this 6% differential to be paid. So supplier can have option. If it is B2B supply, he can raise debit note. But if it is B2C supply, then problem. Where you will get the customer? They might have gone, and this 6% going to be additional cost on your head. So classification of goods and services very important in GST, outward supply, which is not the topic today. But I'm doing interplay with the ITC part. So you need to classify your goods and services correctly. And you need to pick up your correct HSN and SSC code for goods and services. Now, in this case, 6% differential may be demanded by the department. Either you pay suo moto and make out your case of 73, which is non-fraud cases. Had it been 74, section 74, fraud, separation, misstatement, then let me ask one by one and try to give the answer. If it is 73 case and you're raising debit note to your buyer, to the registered buyer, B2B supply, today, Let's say transaction was of 1819. Listen very carefully. And let me see who gives the answer. I can't see, but I can really guess. Transaction invoice rate was raised in 1819, 12%, whereas it should have been 18%. On realizing the problem, you are now raising debit note today's dated 29th of July, 2022, pertaining to your transaction of 1819. What should be the time limit to avail ITC for the buyer? Because original invoice was dated 1819. Pertaining to that invoice, you are raising debit note dated 29 July 2022. So this debit note, which is dated today, but pertaining to your original invoice of 1819, whether your credit can be denied because of time limit, as prescribed under section 16, subsection 4. Please give me the answer. It can be denied. And answer H. It can't be denied. There is specific delinking from 1st January 2021. 1st January 2021. So you have to really consider the date of debit note as relevant date for calculation time limit for availing ITC under section 16, subsection 4. So you got a good, good pointers to resolve this particular problem. Now, second question. You did not pay by suo motu. You did not pay suo motu. By yourself, you did not pay. Department catch hold of you. And now they are demanding this tax under section 74. And 74 is fraud, suppression, collusion, misstatement. Credit can be availed. This is the point I'm going to ask you, even though it is B2B supply. Please listen carefully. In case of 74, there is specific restriction that credit can't be availed. But it is a debit note which I'm referring to. So you have to be very careful that you may end up paying these tax, but then you want to raise the debit note because of 74 proceedings. It can be disputed, and then the time limit, this credit is not available. So having said this part is again over. Now I'm going to touch base important aspect of section 17, subsection 5. I'm left off with half an hour. So maybe 15 minutes I will deliberate. And after that question answer session, I've got a lot of queries. I saw that many questions are being posted in my chat box. And I'm sure each one of you are still tuned with me and going together. So that will help me to really, deliver the topic in a bestest possible manner. I'm trying my best that this GST input tax credit is such a complicated issue, such a complicated topic, but still I'm trying to make it lucid. I'm trying to make it really understandable to my audience today. I can't see, but those who know me, they can really ping me and tell me, yes, you got the way you wanted from my side, and that too without PowerPoint presentation. Listen now. Under section 17, again, we can say that GST even preamble object clause was seamless flow of credit. They have inserted negative list. They are saying, Bimal, even though you're paying taxes on goods and services, and which is used in the course of furtherance of business, but still I will not give you the credit. There's a block credit concept, negative list concept. So before I touch base 17 subsection 5, let me start 17 subsection 1 says, Bimal, when you're using goods and services for business purpose, credit is available. For other purpose, no credit. Section 17 subsection 2, they're saying credit available for taxable supplies, including zero rated. And even if zero rated are exempted, but still credit is available, please, zero rated means export or supply to SEZ unit or developer as per section 16 of IGST Act. And to exempted supply. So there are two categories, taxable including zero rated, credit is available. Exempted, no credit. Then they have given certain 17 subsection 3, they talks about what would be the value of exempted supplies. So let me do one case study. I will do 2 more case study, and that would be the conclusion of the day, and then question answer. What would be the value of exempted supply for reversal of ITC, common ITC, in terms of rule 42 and 43? Let's say I'm registered in Delhi, and I got one order from my US customer. He wanted certain supply of goods. So I could have supplied the goods from India to US, but instead of supplying from India to US, what I did, I have find out a vendor, supplier at Korea, South Korea. And I have supplied these goods directly through my vendor at South Korea, from South Korea to US. So South Korea vendor is raising invoice to Bimal Jain, Delhi, $100, which is coming on debit side of my PL account, $100. And Bimal Jain raising invoice of $120 to US customer outside India. So credit side of my PL account. Let's resolve one by one. Debit side of PL account, $100 purchase invoice from South Korea with a GST leviable, any custom duty as an import of goods leviable. I'm just asking, try and visualize. Answer H, no custom duty, no IGST, because goods are not entering into custom frontier of India. Goods are going from Korea to US, no custom duty including IGST. Next question will come, the $120, which is my revenue on credit side of my PL account. GST leviable. Please try to visualize credit side of my PL account, which is my sales revenue with a GST leviable. Answer H, not leviable. It is neither a supply of goods nor supply of services in terms of Schedule 3. Schedule 3. And this para 7 and para 8, entry 7 and entry 8 got inserted in Schedule 3 from 1st of February 2019, and no GST leviable. Having said that, another aspect, when I'm not paying GST on this $120, which is coming on credit side of my PL account, question H, do I require to reverse common ITC, common input tax credit, pertaining to this supply, outward supply, which is neither a supply of goods nor supply of services in terms of Schedule 3, important. So $120, you're not paying taxes. But my question is, there may be common ITC. So whether this common ITC, you need to reverse pro rata, proportionate, pertaining to this outward supply of $120, which is not chargeable to GST. This is the question I'm asking you. And you will get answer under section 17, subsection 3 in explanation. An explanation is saying, Bimal, you need not require to include anything of Schedule 3 in exempted supply except para 5, sale of land and building. So this is not the part of exempted supply for reversal of ITC, except para 5, entry 5, sale of land and building of Schedule 3. This is coming there. So you have to be very smart enough that interplay when I'm doing with the outward supply and ITC, how to check and what to be done. Now coming to section 17, subsection 5. Section 17, subsection 5, a lot of hue and cry, right? Pan India, hue and cry. negative list that credit is not available. It also starts with a non-obstante clause, notwithstanding anything contained under section 16 subsection 1 and section 18 subsection 1. And they are saying, Bimal, credit shall not be available. Credit shall not be available. First, they are saying credit not available on motor vehicle having capacity of not more than 13%, including driver, except when it is used for further supply or transportation of passengers and training. So for 3 specified purposes, credit is available. Next, vessel and aircraft, credit is not available, except when it is for further supply, transportation of passengers, training, and transportation of goods. So for these 4 specified cases, credit is available. Third, any general, repairing services, any repair and maintenance services, and general insurance, which I'm referring to, credit is not available unless it is used for specified purpose for motor vehicle, vessel, and aircraft. So they are saying if it is for specified purpose, credit available. Even to the manufacturer of motor vehicle, vessel, and aircraft, credit is available. Or who are reinsurer, general insurance company, they can get the credit. But what is now important, listen very carefully, is circular is being issued, circular number 172, dated 6th July 2022, and very interesting. Under section 17, subsection 5, clause B, there are 3 subclauses, Roman 1, Roman 2, and Roman 3. Roman 1 says that credit not available on food and beverages, outdoor catering, beauty treatment, cosmetic and plastic surgery. And then they are talking about your leasing, renting, and hiring of motor vehicle, vessel, and aircraft. They are not giving credit, but if it is used for specified purposes, as I discussed, then credit is available. Health and life insurance, credit is not available. And there is one exclusion if it is part of same category. So if you're taking these services as an inward supply for provision of same category, credit available. Or it is an element of composite and mixed supply for your outward supply, credit is available. Roman 2 under 17 subsection 5 clause B, any membership of club, health center, credit is not available. Roman 3, any kind of leave travel allowances given to the employee concerned for the vacation, credit is not available. But issue was there was one proviso under Roman 3, 17.5b Roman 3, there was one proviso, and which was saying if it is obligatory for employer to provide to employee concerned under any law for the time being in force, then credit would be available. But only problem was whether this proviso applicable with the Roman 3 or it is to be read for all the subclauses Roman 1, Roman 2, Roman 3 under section 17 subsection 5 clause B. This circular is now clarifying, yes, this is to be read for all the 3 subclauses under section 17 subsection 5 clause B, meaning thereby if food and beverages, outdoor catering, health insurance, life insurance, renting of motor vehicle, if these are obligatory, club membership, health center, vacation, you have given LTA to employee concern, if it is obligatory on employer to provide to employee concern, under any law for the time being in force, credit is available. And it is available from 1st February 2019 when this provision got amended. So you need to be very careful. But the important aspect, which is time is a pause today, I really want to carry on. but time is really telling me, Bimal, it is 6:45 now. Please try to. So last topic and then question answer session. Umesh bhai, last topic and then question answer session. Listen, I will take 5-7 minutes here, but a very interesting one, because when movie is about to end, you always see the climax. And climax, you see the beauty of total picture which is being narrated today. Under section 17, subsection 5, clause C and clause D. Clause C says works contract services, and clause D says any goods or services used for construction of immovable property other than plant and machinery. Credit is not available. So let's say you all are my client. You want to get your hotel constructed, your mall constructed, or your factory constructed, or your office constructed. Let's say chartered accountant, you want your office constructed, and I become your main works contractor who will undertake construction activity. I'm going to charge GST, right? Question is, can you avail credit? First question, can you avail credit? As per 17, subsection 5, clause C and clause D, you can't avail credit. Even though you're going to use your factory, office, mall and hotel. Mall and hotel are used for outward supply, taxable outward supply. And you're using the factory for manufacturing of taxable goods. Office is being used for the provision of taxable outward supply, but credit is not available. Another aspect, let's say you're a Reliance Industries Limited. You've given me a contract for 100 crore. I subcontracted, main contractor subcontracted this work to a subcontractor, 50 crore rupees. So there are three transactions. Subcontractor giving services to main contractor 50 crore, and main contractor giving services to Reliance Industries 100 crore. So you please try to answer. And I'm sure you must be knowing, but check your answer. Subcontractor charging GST to the main contractor, Bimal Jain, with a credit available as per 17, subsection 5, clause C, credit is available to the main contractor. But when main contractor charging GST to the Reliance Industries Limited, whether Reliance Industries can take credit? No, no credit can be taken by Reliance Industries Limited. Let me do one interplay, good interplay. What is that interplay? GST ITC provision with the interplay with the valuation. Valuation. So we are discussing ITC, but interplay with the valuation. And listen this part, very interesting. You gave me a contract for 100 crore, right? It was all inclusive, material, services, all inclusive. But let's say you, Reliance Industries, you purchase certain material. You were not sure of whether Bimal Jain going to use quality material. So you purchase the material, cement and iron steel from the market directly, and which you have offered to me as a free of cost, FOC, free of cost. So there are two questions coming out, and this is the interplay which I'm doing with all of you. Reliance Industries purchasing cement and iron steel, supplier charging GST to the Reliance Industries Limited, with a credit available to you. I'm asking you, with a credit available? Credit is not available, even though it is in the course of furtherance of business. But had it been the case that Bimal Jain purchasing cement and iron steel for usage in construction, credit available to the main works contractor, credit available to the main works contractor. So difference you must have understood. When as a client you are purchasing, no credit to you. But when works contractor purchasing, then he's using for the provision of services, credit is available. This is one part of the story. Second part of the story, an interesting one. You as a Reliance Industries Limited gave this 50 crore rupees cement and iron steel to main contractor. Interplay with the valuation. Now, Bimal Jain taken contract for 100 crore, right? You gave 50 crore rupees cement and iron steel to me. When I'm going to raise the invoice, I'm supposed to get only 50 crore net. But when I'm going to raise the invoice, I'm going to charge GST. So GST to be charged on what value? 50 crore, which is the net amount I'm supposed to get from you, or 100 crore, including FOC supplies made by you of cement and iron steel. And try to recall provision under section 15, subsection 2, clause B. Supplier was liable, 100 crore, right? It was my obligation, cement and iron steel, but incurred by the recipient. You purchase, hence need to be included. So I will charge GST on 100 crore, even though I will be paid only 50 crore net amount. And see, when I'm charging GST on 100 crore, it becomes double tax for you. On purchase, you did not get credit. And again, 50 crore included in my valuation, you will not get credit. So you need to really go back to the contract. Whenever you are supplying FOC to the supplier, contractor, kindly delink that particular component from supplier liable as per 15(2) subsection clause B. Hope I'm clear to all of you. Last component of this topic, we all know credit is not available. We all know about it. Odisha High Court judgment, Safari Retreats, has given judgment in our favor, taxpayer. But that judgment is again kind of, two-pager. That credit is available to the taxpayer when he's getting a hotel and mall constructed. And these hotel and mall are being used for commercial letting out subsequently. Credit is available. That matter is being stayed by Honorable Supreme Court, and it is sub judice before Honorable Supreme Court. So Odisha High Court judgment is being stayed and sub judice before Honorable Supreme Court. So there may be dispute, many dispute. Now here I'm discussing interplay, and again look at this beauty of interplay. Yes, I know that this credit is disputed, but still I'm looking for the Supreme Court judgment. What should I do as a taxpayer today? What should I do as a taxpayer today? My answer to all of you would be, you have got two options with you. First option, that this credit is disputed and doubted. Should I avail the credit? I will advise you, take the credit. With a caution and my disclaimer, you should not utilize the credit. You avail the credit, but should not utilize the credit. Why should avail the credit? Because to satisfy the condition of section 16, subsection 4, time limit. If Supreme Court decide in favor of a taxpayer that credit is available, and just assume if you have not availed the credit and Supreme Court judgment comes in a favor of a taxpayer, then even though you would be looking to avail credit, you will not get the credit because time limit is section 16, subsection 4. Advisable, take the credit to satisfy section 16, subsection 4. With a caution and disclaimer, not to utilize. So if you are not utilizing and tomorrow Supreme Court judgment comes, this credit is not available, then you need to reverse. You need to reverse this credit. So I can say it is wrongly availed the credit, but not utilized. Now I'm reversing whether any interest leviable under section 50, subsection 3. So reversal of wrongly availed credit, but not utilized, no interest. Fortunately, with retrospective date, July 1, 2017, fortunately. So in all probability, what we should do as a planning, take credit, but don't utilize, so that you satisfy the time limit criteria of section 16, subsection 4. And reverse when judgment comes negative. And no interest leviable. And we can also defend a case that penalty will also not to be levied under section 73 or 74. Hope I'm clear to all my learned members today. There were a lot many other things. Even I could have gone to gift, sample, their combo offer in the market, CSR expenditure. What is the meaning of personal consumption, renting of residential dwelling unit, whether credit available or not available? I could have gone further, but only problem is time. You would be looking that at 7 o'clock, you will sum up your work and go back to your residence. But still you're tuned with me. I do not know how many of you have started with me and still continuing, because I can't see the numbers, but I'm happy that my deliberation has gone to a level. I could see Umeshji was throughout. He was throughout with me, and he was listening to me. He was giving, he was shaking his head here and there, telling me, Bimalji, yes, no, similar, like he was representing to all of you. So Umeshji, this is all from my side, and thanking each one of you from core of my heart for your patient listening. Umeshji, back to you. And now we can take question answer. Back to you.
Yeah, sir, the question answers are in the panel. If they are visible to you, you can choose.
I can. I'm taking them. Just allow me.
Because near about 55 questions are there.
Not an issue. I'm trying my best.
Whatever and, sir, and 952 participants are there live.
So I'm thankful to each one of you, 952 participants. Those who know me, they can definitely ping me after this webinar. At least I should get a message that you were with me, listening to me, you were throughout with me, and you have enjoyed today's session. I'm sure I can take your feedback, good feedback, constructive feedback. Yes, you enjoyed today's webinar on such a burning topic, important topic, GST input tax credit. Let me take maximum question, whatever possible within the 5-10 minutes, and then we will close the session today. Let me open the question answers. There's some Miss Jonah Bose from Kolkata. She is asking, while filing 3B, I'm paying RCM, but not taking it as input as there is negligible outward tax. But input that is utilized for normal outward supply is gradually depleting. Is it correct? This has been the practice for years. It is not correct, Jonah. You may not have enough output tax liability does not mean that you should not take credit. Take credit. It is your recurring bank account. And tomorrow when your liability comes up, you can always utilize your e-credit ledger for discharging your output tax. There's one person from Mumbai, Nayan Kumar Patel, Mr. Nayan Kumar Patel. ITC is eligibility on GST paid under RCM for rent paid for employee residence. Oh, I really wanted to take this topic, but I did not take. But my answer to each one of you would be, if company is taking residential dwelling unit for residence of employee concerned, credit should be available. It is being considered as a business expenditure on debit side of my PL account in the course of furtherance of business, and I can always debit. It is not a personal consumption, and credit should be available. Even though I'm giving residential accommodation to my employee concern, it is obligation on me. It's a process, business process. As a business policy, I'm giving residential accommodation to my employee concern and debited to my PL account. Credit should be available to my considered view. There was one participant, Mr. S. Gunasekar from Chennai. He was only asking, can I allow to participate? I do not know whether you are participating or not, but yes, it was open for all. Now coming back to Ramesh Pathak from Ahmedabad. Elaborate with example in regard to clause C and clause D of subsection 5 of section 17 of CGST Act. Rakeshji, I'm sure you must have enjoyed that works contract, goods and services. Example of construction of factory, office, hotel and mall with Reliance Industries Limited, interplay with the valuation. So I did try from my side. Okay. So Mr. Sunil from Gurugram, he's saying for ITC 2122, for availing up to September 22 or November 2022. My dear friend, yes, Finance Act has amended section 16, subsection 4. Now it is 30th November, but this is yet to be notified. So till the time it is notified, we can't say at the moment that this is going to be applicable for financial year 21-22. So you may wait that when it is notified, we will come to know it is relevant for 21-22 or not. Ghaziabad, Mr. Dipanshu Mittal, how we can assure ourselves that supplier provided genuine ITC as we cannot check their GSTR two-way. Dipanshu, I'm sure you must have heard me thoroughly today. And I talked about GSTR two-way. And let me take this, your question further. That we are finding as on date that buyer's credit, recipient's credit is being denied for a number of reasons, because supplier is non-existent, or supplier did not comply with the GST law, or his registration got cancelled with retrospective date. And let me tell you, there are 3-4 judgments today. Odisha High Court judgment, Bright Star Plastic Industries Limited. Calcutta High Court judgment, LGW Industries, which was relied in further judgment, Sanchita Kundu. And in all those judgments, it is being stated that you can't deny credit for the buyers, for the recipient. He may be non-existent. His registration got cancelled with retrospective date for either or region. Department has to prove connivance of supplier and recipient for denial of credit for the buyer, for the recipient. Unless this connivance is being proven, it is, and it cannot be alleged that this is not a genuine transaction. This is genuine transaction. And that is what the crux of all these judgments, which I'm passing on to you. But this fake invoice, fake credit, many pointers were there, but within 2 hours, whatever best possible, I tried from my side as well. So Shreya is saying, new amendment as per GST Council meeting, 47 GST Council meeting. Shreya, whatever important from GST ITC perspective, I really tried my best and given the answer to you. So from Mumbai, there's Mr. Yes Arya. He's saying GST under RCM has been introduced on renting of residential dwelling. There is no amendment in section 17, subsection 5. Yes, I have given the answer that if we can prove it is in the course of furtherance of business, we can always debate it is not a personal consumption. Hence, credit would be available, yes. Now coming to next question, which is Arun Kumar Arora, saying whether ITC of medical insurance paid for employees available. Arun, now possible. If it is obligatory for employer to provide to employee concern, and circular number 172 dated 6 July 2022 helping you, and credit is available. Arun is again asking whether ITC of GST paid under RCM for residence of director is available. I told you if it is in the course of furtherance of business, we can always say credit is available. Of course, there are two different schools. One school is taking conservative view and they are saying, no, it is not available because personal consumption. But I'm saying when it is debit side of my PL account, deductible expenditure, for in the course of furtherance of business, credit would be available to me. Okay, so there's a Soumya Srivastava from Noida. She's saying GST on food. Yes, 17 subsection 5 clause B, Roman 1, Roman 2, Roman 3. And if it is obligatory for employer to employee concerned under any law for the time being in force, credit is available. Now there's Mr. Akshat Agrawal Bareli. He's saying not in possession of taxable invoice. He's not having tax invoice. Either not received goods or services. So he's saying that he's not having tax invoice and maybe a case goods and services are not being received. quite obvious, then credit is not available. So Mr. Ramajayam from Chennai, he's talking on import. I said, even though it is not coming in GST or 2B, but still credit is available. There's nothing to worry about. Okay, so going down a little further, there is Mr. Amanuddin Malik from Kolkata. Is 180 days applicable to relative from whom registered person purchased the goods? Schedule 1 transaction is being excluded, related party. So no reversal is required for that particular provision. So one person who is appreciating to me, which I never wanted to utter, but he's saying from Dubai, Mr. Mohit Kishore Tekbani, amazing speaker, enjoying this webinar. Thank you very much. And going down further, there are many questions. I'm just thinking what to be done. There's Mr. Avani Sunny Tejwani from Pune. My client has received so-called notice for reversal of ITC with interest. Don't reverse till the time it is a proven case. I discussed certain provision and kindly check. Since facts are not being narrated, I can't say, but you need to go back and check the ITC, provision. All right. So lot of, recognition. There are one Mr. Pragesh Jain Nagpur. ITC available on car repair expenses if it is for specified purpose, like for further supply, transportation of passengers, training, then only this credit going to be available. Similar, Pragesh, insurance of car. Since we are using the car for our own business, be a chartered accountant, we bought a car, credit is not available. So even for repairing and insurance of that car, which is not, again, we can say credit is not available. It need to be for further supply, and further supply sometime debated. There's the one school which is saying further supply means I'm using the car for, but specific exclusion, car having capacity of not more than 13%, including driver, credit is not available. So I'm of the considered view that repair and insurance would be denied in this regard. So Umeshji, I think we should sum up here.
Yes, sir.
Lot of queries, but I'm sorry to my all participants. I said that I've tried my best to ask dedicated, no pause, nothing. So I'm trying that you should get maximum of today's vibration. You can always ping me for your input, suggestion, feedback, and some query. In case time permit, definitely I'm going to provide answer to each one of you. And we are really walk the talk. And let me thank Indirect Tax Committee and GST Committee led by Sri Rajendra Kumar ji, Chairman, Co-Chair CA Umesh ji, and Secretariat team, and all the members for listening to me. Thank you very much. With full hand, take care of yourself. God bless all of us together.
Yes, thank you, sir. And really, we appreciate your uninterrupted 2 hours without taking any water. Sir, you continued. Hats off to you, sir. And sir, for 4 to 5 times you said that there is no PowerPoint, no PowerPoint. On that point, I just want to say something. Sir, knowledge is power. And when there is a pure knowledge, because Bimal means purity, and when there is a pure knowledge and you are such a powerful person, there is no need of PowerPoint for you, sir. I will say it that every participant will agree with me that you don't need PowerPoint presentation, because you yourself are a powerful person, because you are having a knowledge, and that is a pure knowledge. Because sir, you have taken section 16 thoroughly, section 17, along with High Court judgments, Supreme Court judgments, you have answered the queries, and sir, God has given you much more powerful knowledge. So sir, we thank from heart. Thanks from our all the participants. Thanks from our team, Indirect Tax Committee, and thanks to the ITC Way Forward issues which you discuss. And I hope our participants have enjoyed this. and we will come back to you, sir. The members will come back to you, and we will take your hand holding much further, much way ahead. And sir, as regard the participants, it's an income tax due date of 31st July. And all these 950 plus members are core GST person, and they love you very much, sir. So this is the proof.
Thank you. Thank you.
Yes, yes.
Thank you.
Thank you, sir. Thanks for joining, sir.
Thank you. Thank you. Thank you. Thank you.
Thank you, sir. Thanks a lot.
Thank
Thank
you,
you, everyone.
Thank you.
We can sign off for the day.
Thank you.